Now I'm investing in the worst public companies in America, according to the ratings.
Yeah.
There's nothing you can do in the interest of being above average that does not expose you to the risk of being below average. You can't succeed if you don't survive. That when you know something for certain, you can get into big trouble. It's absolutely the truth. I believe strongly that success carries within itself the seeds of failure, and failure carries the seeds of success. What do you learn from success? And these are horrible lessons.
You went on to do a career where you lent money to bad companies people thought were bad, and you made a lot of money doing that.
Yes. Mike's idea was that, and it wasn't unique to Mike, that even a crap company should be able to raise money in the bond market if it's willing to pay enough interest to compensate for the risk. And that's what happened. So now, as you say, now I'm investing in the worst public companies in America, according to the ratings, and making money steadily and safely. So I reached two important conclusions. It's not what you buy, it's what you pay. And success in investing doesn't come from buying good things, but from buying things well. And if you don't know the difference, you're in the wrong business, literally. So everything you buy should offer some combination of excellence of quality and or attractive price. You don't want to buy a great company at a terrible price. And you mentioned that I had more correct forecasts than I admit. But the truth is, they weren't forecasts. They were just observations of current conditions. But nevertheless, when I was working on the book about market cycles with my son Andrew, who is a very good professional investor, I said to him, Andrew, you know, I think when I look back, I do admit, I said, I think most of my market calls have been correct. He says, yeah, Dad, that's because you did it 5 times in 50 years. But it was a very profound thing he said, because 5, 6, 7, whatever it is, times in my career, prices were either here or here. And when prices are at absurd extremes, the logic for a market call is very strong, and the probability of being right is very high. But not when it's here or here, or here or here, or here or here, you know? And that's really the difference.
I want to talk a little bit about emotion for a second. How did you keep yourself from being emotional?
Well, first let me say, if you think about the norm, what happens? Things are going well, the economy is performing well, companies are reporting good earnings, stock prices are rising, everybody's optimistic. And the longer this goes on, people become more and more and more positive, and until they buy here. And when they run out of money, then things turn around. Then eventually the economy weakens, then the corporate profits aren't so good, and prices start going down, and people start losing hope. And as this continues, they get more and more depressed and more panicky, and they start fearing further losses until they sell out down here. In other words, they tend to buy more here and sell more here, which is the opposite of what we all should do. My mother said, Howie, buy low, sell high. So emotion is our enemy. Emotion tends to get us to do the wrong thing at the wrong time. And we have to resist that. And one thing I point out is that the influences that affect the crowd and make it do what I just described, those influences are universal. And I feel them too. And you feel them too, and everyone in here. We read the same newspapers. The news is the same for all of us. In order to outperform, by definition, you have to depart from the crowd. You have to hold a different position, and you have to have resolve to do it.
You originally introduced a philosophy or term like you need to dare to be great.
In order to be a great investor, you have to dare to be different. As I just explained, you have to be willing to do some things that are unpopular and by definition will look crazy to others. You have to dare to be wrong. I think the goal in investing for professionals is to be above average. Investing is a funny business. It's really easy to be average. You just buy an index fund. It's really hard to be above average. But if you want to be above average, everything you do in the interest of being above average exposes you to the risk of being below average. You overweight certain stocks, that's potential error. You avoid certain stocks, that's potential error. You diversify abroad versus the US, that's potential error. You buy high beta stocks, low beta stocks, et cetera. You hold some cash. There's nothing you can do in the interest of being above average that does not expose you to the risk of being below average. So if you dare to be different, you have to be willing to be wrong.
And one thing that might help someone with that is humility, which is something you're a big fan of.
Yes.
And that's a key cornerstone of our investment culture here.
Yeah, good.
You're also a fan of Peter Bernstein, I believe. Yeah. And I just wanted to read a quote from him.
Yes.
Humility is an enormously important quality. You can't win without it. Survival in the end is where the winners are by definition. And survival begins with humility.
First of all, it kind of goes without saying, but I'll say it anyway. You can't succeed if you don't survive. Mm-hmm. And one of my favorite adages is, don't forget the man who was 6 feet tall, who drowned crossing the stream that was 5 feet deep on average. Mm-hmm. The concept of surviving on average is irrelevant. You have to survive every day, which means really that you have to survive on the bad days. And so that's why I say you have to arrange your affairs, which means your financing or your capital from your investors, whatever it is, or your portfolio, so that you can survive on the bad days. Mm-hmm. So that's one thing. But humility, it's all about humility. You have to, Dirty Harry said a man has to know his limitations. Mark Twain said that when you know something for certain, you can get into big trouble. It's absolutely the truth. And, nothing in our business is certain. And anybody who's certain is really missing the point. If you look at human endeavor, I believe strongly that success carries within itself the seeds of failure, and failure carries the seeds of success. Mm-hmm. What do you learn from success? I can do it. I can do it again. It's easy. I can do it in other fields. I can do it with more money. I can do it alone. It was me, it wasn't the team. And these are horrible lessons. So I think that success teaches terrible lessons because it plays to our egos.
Ego, yeah.
And I think you learn more from your failures, and hopefully you learn humility.
One last question on this is that how do you balance the importance of knowing there's incompleteness of knowledge with the fact that ultimately you have to make some decisions because you're managing people's money?
All these things are about balance. Mm-hmm. If you assume you know nothing, you can't function. If you think you know everything, you're going to get in trouble. You have to strike a balance, and hopefully it's an appropriate balance. Mm-hmm. Think about confidence. Mm-hmm. If you're an investor, if you don't have confidence, then every time you buy something, if it goes down, you're going to sell it because you're afraid it's going to go down more, and you're going to be an abject failure. Mm-hmm. You have to have confidence. You have to. If you buy something, it goes down, you have to reassess your thesis, and if it's intact, you have to buy more, or you can't be great. But on the other hand, if you have hubris and you feel you can't possibly be wrong, and every time something goes down, you blindly double down, then you're probably going to get into trouble and maybe be asked to leave the industry. So you have to have this balance: confidence, but not overconfidence; humility, but not overhumility. Mm-hmm.